Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the sterling versus US dollar. A review of what's happened in the New York morning session as London/European traders looked ahead for the exits. So let's get going. Bank of England Governor Bailey is speaking in the House of Lords, and some of the comments that he said this morning include this morning in the U.S. session, afternoon in the London session, is that latest wage data showed quite a market reduction, but not as far as we thought. Service inflation not compatible with 2% inflation. That would be a more hawkish comments. On the more dovish side, said, or positive side, said latest inflation data is good news, shows more downward pressure than we expected. That's the overall wage data. Downward pressure on inflation quite broad based. We're seeing signs of beginning of a growth pickup. So he's back and forth in some of the comments in trading here today, and that's what we're seeing in the price action for the sterling versus US dollar. Take a look at the 4-hour chart here. What do we see? Well, the low price that we saw in trading here today in the New York morning session, London afternoon session, we did move closer to the 38.2% retracement. That level comes in at 1.25245. And recall from last week, the price came down to and through that level briefly, but then rotated back to the upside. So we do need to get below that 38.2% retracement. We couldn't do it so far. So we have seen a rotation back to the upside. That rotation back to the upside move back up to test that key 200-day moving average at 1.23625. Also within, or that 200-day moving average is within a swing area between 1.2558 and 1.2571. I talked about that area in the morning video, the Kickstart video today. We needed to get back above those levels to increase the bullish bias, and couldn't do it. We found resistance sellers near the 200-day moving average, which is good news. And the current price is trading at 1.2553, below that 200-day moving average. So the sellers are trying to keep a lid on this pair. We'll see if they can be successful in doing that. But ultimately, we're going to need to get below that 38.2% retracement level and stay below that level. That is of the move up from the end of September low right here to the December high right here. 38.2 comes in at 1.2524. Need to get below that level. Need to stay below that level to increase the bearish bias. But staying below the 200-day moving average, I'll take that for the bears right now and keep them in control. So that's my updated technical look at the sterling versus US dollar. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.